Trading indicators won't make you money, or just trading indicators won't make you money. You need to add discretion to your trading. And like many things, you treat it like a muscle. You're going to have to work at it, get reps in the gym, aka in the charts, to build this discretionary muscle, because it does come with experience, with time, with repetition and pattern recognition. You're going to build your discretion through time, but the more you can start practicing it now, the better you will be in the longer term. So let's get into today's trades, where I want to go over, if you've seen Futures 2.0, first of all, which is the course that I teach on ASFX TV. We can take a look at that real quick. 2.0, Futures 2.0. I teach the indicator from A to Z, everything you need to do to get in, get out, stop loss. We don't need to go into all that, but if you are interested in getting access to this course as well as the live streams, you can actually use code EVAN and get 50% off your first month. This way you'll get access to the two courses as well as the live streams where I take the trades that I teach. I'll take them on the live stream. And if you miss those, you can always go back and watch the replay from the streams. Here's today's short, which we'll go over in a little bit. But let's get into the chart right here of discretion. Because like I was saying, if you've seen Futures 2.0, or once you do go see it, the strategy here of anchor to the high day view up, a nice bullish open, clearly bullish, buyers are in control. I'm looking for this bounce off New York view up. Really clean. Here's our higher low. A break of high day view up saying buyers are in. So let's go continue the trend upwards, because you can't really deny that the trend so far today has been bullish. So here's our higher high, not chasing that, pull back. Let's go continue the trend. That looks like all of my trades. So how do I not take this long? And I actually took a short. Well, discretion, because the indicator alone of saying a break of high day view up is not going to just continually paint me money. Same thing as if I just were to chase this short because it broke below New York view up. It's not going to make me money. That you can't rely solely on indicators as a trigger point of entry of saying get in now. You need to add these other layers, aka your trading plan, which I also teach you in Futures 2.0. So I teach you a little bit about the discretion, the other things that I do read and take into consideration for my entry ideas. Because now let's take a look at the 15-minute, one of the key parts that I watch. Let's throw on a yesterday's New York view up. I'll sync that over here on the right side. Now that long is into a key VWAP. So it just rejected there. Do I want to take a long back into that VWAP? Probably not. So that discretion is telling me, yes, I see that we're breaking the high day VWAP. I see that we're bullish so far since the open. But what's telling me that we probably go higher, right? Because it's not alone, like I said, this break of a high day VWAP saying that we're going to move higher or that we probably move higher. Let's blow up this 15-minute here so you'll see more of what I mean. All week we've been bearish, but we could even just look back to yesterday. We have clear lower highs from yesterday. All overnight couldn't move higher. These equal highs up here underneath yesterday's New York view up, that same blue one that I'm talking about. Let's zoom it in here to the open. We had NFP news, pin this yesterday's New York VWAP. This is the New York open, this black bar. So when it looks super, super bullish on the 1 minute, those higher highs and higher lows, absolutely. Is it a bullish trend or is it just a pullback in this bearish trend? Actually giving me great opportunities to sell it back in the actual trend, which is bearish, right? And then you get the extension back lower. So rather than long it on that break of high day, the discretion would tell you, hey, maybe the longs don't want to come in yet because we're not really making higher highs and higher lows on the higher time frame. There's some VWAPs in our way. I don't know if this particular high of day break on the 1 minute is going to win, right? It's not as easy as just taking every high day VWAP break. Otherwise, we'd have 30 trades a day or 40. So adding that discretion, hopefully you avoid that losing long. And now we start to think, well, how could I have gotten into the shorts then? Because let's take a look at my trades here of using some of my discretion as well as always using the VWAPs. So there's two on here, two different accounts. So you'll see the arrows on the first one. The first short is the rejection of the yesterday's New York VWAP, getting back below that on the left side here. I really like the way that 15-minute was forming. We started up bullish clearly to leave that pin. And then at this time, you can see in the markup, there was maybe 2 minutes left on this 15-minute candle here. And I really like the way that we were closing back down at the daily VWAP, the black line. And that we probably are going to close down here because there's only 2 minutes left, right? Another note on that would be, I'm not going to just enter mid-candle saying, oh, look at that pin above, if there's like 10 minutes left on it, because it could easily fill right back up. But being that that's the end of the 15-minute candle, sellers stepped in at the very end, I think we might want to continue lower because that's my read of trend on the 15-minute coming into this open. So I'm just looking at this as a really good sell price on the 15-minute because you know I love selling it around this daily view up. That's where the price normally wants to move from, or the moves want to happen from. So clean idea there. Pumps lower, I take profits quickly. Then the second trade on a different account, there's execution of that one. It pulls back. Here's the high day view up that I'm avoiding. I'm not going long because I'm actually bearish today. So rather than getting induced into that long, once I see the sellers step back in and those buyers fail to hold that high day view up, I'm looking at that as a great opportunity to short it again back into this 15-minute overall trend that we're in. And this thing moves a lot lower, like you can see here on the 15-minute. A lot lower. And then, okay, we'll go over some more discretion for these afternoon plays. But hopefully that all makes sense because I can't deny it. That's a bullish open on the 1 minute, break of high day view up, bounce off New York. Why shouldn't I take that long of it? I don't understand. That's what you taught me in Futures 2.0. Add a little bit of discretion of what makes you think this wants to move higher other than a break of high day view up. There's a yesterday's New York in your way. You're at the daily. The 15 minutes been falling. This whole entire week has been bearish. So is the sentiment really bullish, or have we just been moving up for 30 minutes, right? Zoom on out. Don't just zoom in on these 1 minute candles and chase that momentum. Now, here's the 15-minute notes again. You can see there. Let's look at another example of how to use the discretion and not just get sucked in based off of the indicators, because the indicators alone aren't going to just make you money. Otherwise, like I said, we'd be having way too many trades of taking every single low a day view up break, high day view up break that you call to the new low a day. Let's anchor it there. Let's anchor the new low a day there. So we get a pullback to the New York VWAP. Beautiful. It actually spikes up a little bit above and then it comes back below. How do I know I don't want to sell it there? Because the trend's clearly bearish and I won't deny. Let's go to the 15-minute on that view of it. On the 15-minute, we get that same thing I'm talking about, the 15-minute candle here. Starting bullish above the daily, actually closes back bearish and below. So that's really good for shorts. I can rewind it. It's going to look even better. That looks like a great sell price right off the daily, clearly underneath yesterday's New York. Is this going to be our lower high that continues the trend lower? I mean, that's pretty much what I did earlier. Is it not? This is the same looking idea of there's the hold of it. Let's go lower. There's the hold of it. Let's go lower. And it's not super easy to avoid this one. But again, how can I maybe avoid this? Let's use some discretion and not just solely react off VWAPs. Even though they're super powerful, Powell's speaking at this time. It's on a Friday. That's a strong rip higher that buyers just stepped in from the low a day at 12 o'clock. 300 points here on NQ, like 60 points on ES. That's a strong momentum move straight up, and Powell is speaking. So when Powell is speaking, or anyone is speaking, or there's any news event, you definitely have to take in discretion because now the fundamentals are taking over and the technical analysis of a hold of this VWAP doesn't mean too much in the bigger scheme of things of, well, what is he saying that is that going to want to make the market go higher or lower? Depending on what he's saying, who knows? So it's just a riskier time to be trading. So rather than getting sucked in on the momentum back below New York to go continue that trend, you're saying Powell's speaking, there's news coming in. I don't know where this wants to go because of that in the short term. Let it fizzle out first and then hopefully avoid the losing short. It's definitely been a wild week of a lot of double breaks of this initial bounce because you could see if I told you, hey, at this point of the day, where do you think we finished the afternoon? You'd probably say lower. Nice lower highs and lower lows, all underneath New York, all underneath yesterday's New York. But these afternoons have just been rallying in the opposite direction. And we actually go make a new high a day and double break the initial balance. Now, one thing to note, and it sucks to, unfortunately, it's still obviously going to be a bearish week. It was never looking bullish, even though it rose in the last hour. So when you zoom out, you're like, yeah, that was just probably another pullback. And maybe we'll make the lower low on Monday. Who knows? But hope you guys found value in it. Hopefully you guys understand. The VWAPs are very powerful. Like I said, definitely rely on them. But you need to add that discretionary muscle of getting the repetition of almost look for reasons not to get in. Just to make sure that if there's not really many things telling you not to get in, then this might be one of those great trades, right? Because I would love this trade. Go back to this first example we had. I would love this setup. If we get rid of that because I wasn't there, let's say yesterday's New York VWAP was here. And leading into this New York Open, we were making higher highs and higher lows above yesterday's highs. So it's been a bullish week. This looks like trend continuation. I would 100% be in this setup because that's in line with the trend. There's no levels in my way. I have reason to believe that we might move higher or probably move higher. And that's going to probably be the winning setup of the day. But on a day like today, this one specifically, and many other days as well, adding that discretion and not just solely reacting to every single VWAP break or every single indicator. Because it's indicating that buyers are in, But using the discretion, I know I'm saying it a lot in this video, using that discretion, what is the probability that we continue higher? I know buyers are stepping in here, but what's the likelihood that they stay in and they continue as higher? Well, with all the other information I just showed you, probably not likely. So I'm not going to chase that long. Now, you don't have to short it just yet, but now you start looking, well, if I don't want to long it, do I want to sell it? Where would I want to sell it? And then you can look for entries on the drop below New York after this pullback, the retest off initial balance, and you could take advantage of the bearish trend. So super, super clean day on that. Really nice to be in the market like 4 minutes. You can see this trade was like 3 minutes. This first one was 3 minutes. Very quick. My favorite plays off this daily VWAP. So it was a nice way to finish off the week. And to remind everyone, these are all on Tradeify accounts, the 50K straight to funded, where if you use my name, Evan Dyer, you actually get 30% off all of these accounts. And actually, if you get the 50K account, you'll get 35% off. So definitely don't buy it at full price. Use code Evan Dyer. I'll save you on all of these accounts. But that's what we're on here for this week. And if you saw Tuesday's video, the blow up day, still tough one. But we made a lot of it back on this Friday. So small red week. We'll take it. Nice to claw back some of those gains. We'll keep pushing on to next week and make it all back. But I appreciate you guys tuning in. Make sure you guys definitely check out the Futures 2.0 course so that you can learn the strategy as well as discretion. Keep tuning into these videos. I'll keep showing you my discretion as well. And then check out Tradeify with my code. And let's start taking payouts together. I appreciate you. Trade safe. I'll see you guys on the charts tomorrow morning.